Ladies and gentlemen, the S&P 500 just closed above the 6,200 mark for the first time ever. This is what capitalism has brought to us, but things are changing. A commie has just won the New York primary, and here is some of his policies.
Zoran Mamdani, what are you doing?
Oh, I'm just picking up trash off the floor.
What do you think about the rent prices?
Rents have become astronomical and are pushing everyday hardworking Americans out of their homes.
What's your message to the Indian community?
The rent prices are way too high. Very big problem.
What about the black community?
I come all the way here from Uganda and they shut off my water because I don't pay. Why?
No, the African American community.
Man, I just feel like they tripping on the prices. They trying to price gouge. You know what the landlords be doing, but I ain't worried about it. I'm still Zoran Mamdani, man.
What about Gen Z?
So I understand it's not about the rent increases, but it's the feelings associated with the rent increases. And therefore, we're going to give them free therapy.
What's up with all the accents?
So it's actually called code switching, and I'm way better at it than Kamala Harris.
Welcome everybody to the Daily Recap Show, where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks climbed to fresh record highs on Monday amid signs of progress in trade talks, ending one of the most volatile first halves of a year in recent memory. And it was broadly green, very green across the board, except here in the discretionary space. Tesla and Amazon really held the XLY back. Google for the communications sector, that was pretty much it. Everywhere else was broadly green. Apple breathing a bit of life into the tech space along with AVGO, as well as the smaller names in the infrastructure space. In fact, excluding Microsoft, Oracle, Palantir, Palo Alto, these names were very, very bullish. Financials, Visa, MasterCard, JP Morgan, very green as well. In fact, the communication services, excluding Google, was actually very green. Meta, the telecoms, Netflix, Disney, green across the board. We did see a little bit of red, but in sectors such as the XLB, materials, discretionary, and energy. These were the only red sectors. That was pretty much it. Everything else was green. The S&P 500 up 0.55%. But gold, the best performing asset class, up 1.18%. And we'll talk about why that is in a little bit. But technology up 1%, completely outperforming. Again, that largely had to do with Apple. And I think I showed you guys this last week. If you take the technology space, the XLK, and you remove Apple, right, it would be up 7% higher than what it is right now. So we could see a little bit of a catch-up trade with Apple. And if that is the case, expect markets to continue to go higher and expect Apple to carry the rest of the market. And Apple is that big of a name, a lot of momentum. People love the stock. We could definitely see something along those lines, and Apple could take us higher over the next month or two. XLF financials up 0.84%. And guys, when you have tech and financials gaining, you're going to have the market gaining as well. You know, XLC, real estate, healthcare staples, everything was very, very green. And the day sort of started off green, and we sort of just continued with a little bit of a push here to end the day, up 0.55% for the S&P 500. It was really just a day for growth, large cap growth, mid cap growth. They were the outperformers. Small caps did take it on the chin, and then value and core in large caps and mid caps was slightly green, leaning bullish. Globally, it was kind of mixed. Look, North America and South America were actually pretty green. Europe was very, very mixed, mostly red. Asia, China, India, also very red, but Southeast Asia, very, very strong, along with Australia. Again, another green day there. So all in all, it was a mixed day across the board. But the reason why the US, Canada, North and South America were actually very green today is because of some trade news. Now, on Friday, stocks had a little bit of volatility because Donald Trump said he was suspending talks with Canada because of their digital services tax. Canada came to the table over the weekend and rescinded its digital service tax, which is just a 3% tax on stuff like Meta, Google, Apple, to advance broader trade negotiations with the United States. So Canada coming to the table. And I believe Canada and the US want to reach a deal by the 21st of July. And I think that is the EU is willing to accept a 10% universal tariff in a trade deal with the US, but wants lower rates on drugs, alcohol, chips, and aircrafts per blue buck. So look, they're willing to accept 10%. They want a bit of concessions for these high impact sectors, drugs, alcohol, etc. And then Caroline Levitt came out and said that the India trade deal is coming very, very soon. We also know that we got a China trade deal on the past weekend. So we're getting all of these trade deals. And I think within the next 1 or 2 weeks, you're going to see one after the other. And this is good news. They can actually propel us higher. And then when it comes to the big, beautiful bill, now over the weekend, the Senate put the bill to voting for debate. It was tied 50-50. JD Vance came out and broke the tie. It was 51-49. I believe one Republican senator also came on board. So now the bill will go to debate and it should be signed, I think, near Independence Day, somewhere around there. That is what we're hoping for. That's what Trump is hoping for. But long story short, it does look like this bill is going to pass via the reconciliation process. And then looking at some market movers here today, Robinhood was up 14% today after it launched tokenization trading for more than 200 US stocks and ETFs in the European Union. Stock was up 40% on the back of this. It's probably going to go to 100, guys. Immense momentum in this name right now. Google, however, has no momentum, down 1.32% after Alphabet was downgraded to neutral by BNP Paribas, citing limited Gemini AI monetization. Hewlett-Packard was up 10% today, following news over the weekend that the company had settled a case with the DOJ. The DOJ had sued HP in January to block the company's proposed $14 billion acquisition of Juniper Networks. However, they have settled, and this settlement paves the way to close HP's acquisition of Juniper Networks. Both stocks, HP and Juniper, were up in excess of 8 to 10% today. And then Meta, the biggest stock in my portfolio, was up 0.46%, notching an all-time high today. You love to see it. And then for everything we saw today, guys, there was 3,200 advances, 2,900 decliners. We saw net inflows in the Nasdaq 100 and the New York Stock Exchange. On market momentum, guys, we are extremely close to retaking the 50% mark here in these longer term averages. And that's when we can start making moves higher, onward and upward. But the 5-day, 20-day, 50-day moving averages, 100-day look very, very healthy, well above the 50% range. You love to see it. Now, guys, looking at the charts, you can see it was clearly a day for large caps. The S&P 500 and the Nasdaq 100 outperforming the broader market, the IWM, mid caps, small caps, growth outperforming value in aggregate, but both green for the day, but really a day just for large caps in total. European stocks were down. Middle Eastern stocks, the Israel ETF was up 2%, and then Australian stocks were up 0.15%, virtually flat. Chinese stocks also down 0.5 percentage point. So very mixed price action in the market here today. Look at this. This is very, very weird. Spot VIX up, front month VIX down. So the market's seeing a little bit of near-term volatility, more than, let's say next month or in the next 3 months. So the market obviously not sure about the tax bill, the trade deals, that sort of thing, keeping them a little bit on edge. But yields continue to fall. The 2-year, 10-year, and 30-year yield continue to decline along with the dollar. The dollar is just a waterfall right now. And as a result, bonds were up 1%. And then commodities were very, very mixed, with Bitcoin down, Ethereum flat, gold up, silver up. Now, guys, this is the S&P 500, and we have had a relentless last 6 or so trading days. We had a bullish engulfing candle right here, a gap up and go, one red candle, and then 3 days in the green to where we are right now for closing for the first time above 6,200. And guys, I think this rally is going to absolutely continue. And here's why. When we look at global M2 money supply and the S&P 500, it does look like we probably will continue this move higher, possibly to as high as the 6,800. My year-end price target is the 6,600 area. 6,600 does look achievable. I don't know about 6,800. That does seem like we would be pushing it. But if this momentum continues, the same momentum we're seeing right here, right now, 7,000 may be on the record. But the S&P 500 looking very, very bullish. But closing in at the top end of the range, we may have like one more green day tomorrow. Things not looking super good here in the after hours, but to be expected after the run we've had. But do expect a little bit of momentum here to the top end of the range, and then we might see a little bit of resistance, maybe to de-risk into the end of the week. Now, we do have some high impact data, especially the employment data this week. So that is ultimately going to determine the path as it goes along. But we'll cross that bridge when we get there. In the euro now, the market seemed completely unfazed, and us notching an all-time high above the previous high we made here on the 19th of February. Absolutely insane. It's a very similar situation for the Nasdaq 100. And guys, you should already be long if you follow me on this channel, we said to get long right here all the way up. And now the best thing we can do, it's just time to hold and eke out the gains. Sit through the volatility and just wait for that 6,600 area to come in the S&P 500. We're looking for probably 26, 27,000 in the Nasdaq 100, somewhere around there. All in all, do expect the markets to go because we got trade deals on the way. This new budget bill is going to increase spending. Rate cuts are coming, and that is why markets are absolutely moving. And the truth of the matter is, we eventually will get rate cuts. We eventually will get this bill passed. We eventually will get all of these trade deals, and that's just market upside for the market as a whole. But guys, the first half of the year has been absolutely insane. If we go to a percentage return, the Nasdaq 100 is up 7% for 2025, and at one point we were down 21%. If we go ahead, look at the S&P 500 up 4.8% for the year so far. The first 6 months are done. At one point we were down negative 18%, and if we actually look at it peak to trough, right, from these highs right here to that point, negative 21%. You could actually say technically we were in a bear market. When we look at the RTY for the first 6 months, the RTY is down 4% for the year. So it is clearly underperformed, but I do think if we do get rate cuts, I think small cap should perform very, very well. And I think maybe you could see a little bit of outperformance here from the Russell because it does look like there's still a bit of price momentum to get to the top end of the range. The call wall is what we call it, and it's found very good support here off the gamma flip zone, which has been very, very strong. Now, quickly looking at gold, guys, gold continues its daily downtrend. I think ultimately right now, if you're looking for a support level in gold, it's going to be this 3,200 area. And then below that, it's going to be the 3,100 area. So bulls need to step in right here. Otherwise, this triple top is looking very, very ominous. Quickly looking at the dollar continues to be a waterfall. And I think until the budget bill gets passed, then we should see a little bit of strength because then the Fed can stop drawing down the Treasury General Account, the TGA. But until then, expect the dollar to continue to move downward. And especially if Donald Trump continues his rhetoric with Jerome Powell, wanting to replace the Fed chair, that's also going to see a little bit of weakness in the dollar in aggregate. Looking at the 10-year yield, guys, we are approaching a very, very critical resistance zone or support zone, I should say, here at the 4.1% mark. We'll see if this continues, but if we cross this line right here, we could see ourselves all the way to below the 4% level. And the markets generally tend to like lower yields. It's part of the reason why we've actually seen a little bit of and this is part of the reason why we've seen a rally in stocks, lower yields. And I think this will continue. I think the market is just pricing in rate cuts sooner rather than later based on what Jerome Powell said last week, as well as Donald Trump's pressure. So look, even though there's a lot of pressure and the Fed say they want to remain independent, Donald Trump constantly calling up Fed saying they should be at a 1 or 2% Fed funds. That does give signal to the market as to what will come next. Looking at European stocks down 0.41% today. Guys, ultimately, if we get to this range right here, that's where we want to be a buyer. But the Israeli ETF, if we can get to this 47 mark, which it doesn't look like we are because there's just so much strength, get to this 47 level, I think we go ahead and buy that dip, go from there. This ETF is very, very cheap. And then looking at Bitcoin, it's not super great that we're seeing a little bit of resistance right here, right before these highs. We'll see what happens tomorrow. However, thanks to M2 money supply, we should continue to see Bitcoin move higher from here and possibly go ahead and take out, the 130, 140,000 range. And you see M2 money supply continues to move higher on the back of that. We made an all-time high. And that is, again, just a great signal for Bitcoin as a whole. So onward and upward, we are seeing a little bit of resistance, a tiny bit of divergence. 20% of the time, Bitcoin does diverge, as you can see right there, right there, right there. But the trend, the path of the trend is ultimately what we want to watch, and that is upward to the upside for Bitcoin. And diving into sentiment, this is the Fear and Greed Index. And guys, we are officially firmly in the greeds. We've moved to there from the neutral camp where we were sitting for most of last week. And being in this greedy sentiment is actually bullish because it reflects strong investor confidence and buying momentum, actually amplifying gains during the first 2 weeks here in July, which is a historically bullish 2-week period for stocks, especially for the S&P 500. So expect much more of the same. Expect us to probably even continue to push into extreme greed over the next 2 weeks, and then we should see sentiment abate. And when we look at some seasonality charts, when we look at the S&P 500 performance from June 27th to July 15th, when the trailing month, right, is greater than 2.5%, which is what we've done right now, what are the returns we can expect? And generally speaking, the average return is about 2.49%. So generally speaking, in the next 2 weeks, right, over the next 2 weeks, you should expect anywhere from 2.5% returns. Look, 16 up years, 1 down year. So exceptional hit rate. And so you definitely don't want to be on the side of the bears. And guys, July is historically just a bullish month. In the last 10 years, every single July has been bullish, and based on seasonality, it looks like that streak is going to continue. Let's make it 11 from 11. Now, quickly diving into the macro, guys, we are slowly seeing the Fed's GDP Q2 forecast fall, now sitting just below the 3% mark at 2.9%. Still very, very solid, but we are seeing this come down respectively. And then looking at the labor market, something I saw floating around X, the unemployment rate for college graduates is ticking up significantly, now at 5.8%, as you can see right there. So for those of you actually getting degrees, going and getting degrees, it's becoming increasingly harder for you to actually find work placement. So guys, play it safe, develop multiple streams of income, but this could be not the best. This isn't the best parameter for the economy in aggregate, but the overall unemployment rate is still looking pretty low. And I believe this is the unemployment rate for just out of college. I think if you give it a couple of months, this rate should fall. And then looking at the earnings calendar for the rest of the week, guys, tomorrow we don't really have much of anything. Really, the biggest name for the week is Constellation Brands, ticker symbol STZ. And then data, tomorrow we have Federal Jerome Powell. He's speaking. That's really going to move the market. We also have the ISM manufacturing PMIs. We're expecting a consensus there of 48.8. If we actually hit a 50 mark, that's going to be very, very good. We also get the JOLTS opening, and then the ISM manufacturing employment number, we're looking for 48 there, and then JOLTS 7.3 million, the forecast 7.1 million, so somewhere in between those levels, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.